Vietnam's economy continued to perform strongly in the third quarter of 2025. GDP grew 8.2%, driven by a 9.5% increase in industrial activity. Both manufacturing and construction gained momentum, supported by stronger new orders and a significant increase in state investment. This industrial strength also lifted the services sector, which grew 8.6% year-on-year, led by trade, transportation, and tourism. Retail sales rose 9.5% in the first 9 months, supported by 15.4 million foreign visitors. National Day celebrations and the long holiday period also spurred spending, especially in major cities. Inflation edged up to 3.4%, reflecting higher construction and rental costs and increased dining expenses following new business regulations. Meanwhile, domestic fuel prices slightly rose, softening their previous disinflationary impact. Vietnam's manufacturing PMI held at 50.4, signaling marginal expansion. In the first 9 months, exports climbed 16%, imports 18.8%, and the trade surplus stayed solid at $16.8 billion. Notably, exports to China have surged since the implementation of U.S. tariffs, a trend worth watching closely. FDI disbursements reached $15.8 billion, up 8.5% year-on-year. Developers note that to mitigate risks from the proposed 40% transshipment tariff, foreign manufacturers are considering raising localization rates and shifting more production to Vietnam. The Vietnamese dong remained stable in September, though the unofficial rate saw brief swings. Progress in digital asset regulation and gold market reforms has helped narrow price gaps between global and local gold price, enhance transparency, with early signs of success as the balance of payments turned positive in the second quarter. Vietnam has reached a milestone. FTSE Russell has upgraded the country to secondary emerging market status, and we estimate it will open the door for over $3 billion of inflows to the stock market. Passive ETF money will arrive within 12 months, while active investors are likely to move sooner. After a strong rally since May, the VN index slipped 1.3% in September as investors took profits ahead of the official FTSE review. Foreign investors followed the same cautious stance, selling nearly $1 billion, mainly in Vingroup-related names and financial stocks, which had rallied sharply. Real estate led sector gains, driven solely by Vingroup after it announced the groundbreaking, a $6.7 billion LNG thermal power project, though questions remain on financing and execution. In contrast, financials and IT came under pressure. The stock price of FPT, Vietnam's leading tech firm, saw selling pressure on U.S. Visa headlines, but its fundamentals are firm, backed by $380 million in new contracts. Overall, Vingroup-related stocks continue to dominate market movements, while other sectors remain quiet. At the same time, Vietnam is accelerating reforms, removing requirement for consular legalization for foreign documents, simplifying tax reporting, shortening IPO timelines. Importantly, companies can no longer cap foreign ownership below the legal ceiling. These actions mark a decisive shift from promises to execution, boosting investor confidence. Our portfolio declined 1.5% in September, compared with a 0.5% gain for the FTSE Vietnam index. The underperformance reflects our limited exposure to Vingroup-related stocks, which we remain cautious on as their rally appears detached from fundamentals. The VN index is trading at a 2025 forward PE of 13.9 times, a moderate level versus regional peers. However, this year's gains have been concentrated in financial sector and the Vingroup ecosystem, leaving other sectors, such as consumer staples, materials, and healthcare, largely overlooked despite solid fundamentals. We believe these underappreciated areas present more compelling opportunities, with earnings for Vietnam's top 100 companies forecast to grow nearly 13% in 2025. Additionally, Vietnam is entering a new wave of IPOs, In September, we participated in the listing of Techcom Securities, or TCBS, the brokerage arm of Techcom Bank. TCBS operates entirely on a digital platform without traditional brokers, using technology to deliver investment services efficiently. This innovative model has made it the market leader in corporate bonds and the third largest in equity brokerage. With a solid earnings outlook and a projected 2025 PEG of 1.0x, its USD 400 million IPO drew USD 1 billion in subscriptions. The stock is expected to list on the Ho Chi Minh Stock Exchange in October. Looking ahead, we expect more IPOs to follow, bringing fresh, high-quality opportunities for investors.